Hello, everyone. Stocks continue their sell-off with a very ugly session. Wasn't terrible, but to me it's ugly because all of the indexes have now eclipsed those Friday low of the days without rallying higher and producing any significant gains following Monday's session. There was zero follow-through to that move higher. So our models are kind of mixed right now. The S&P 500, with it being above the 50-day moving average, remains under a buy signal. The main reason for that, as you can see in the SP 500 and the SPY, while there is distribution days mounting up, there's no clear, huge, ugly distribution days. So it's still possible this market can find a floor here and rally higher. I'm about 50% cash now. It's amazing that I've gone from 100% invested to about 50% cash overall in the cash account over the span of 4 to 5 trading sessions. That's a very rapid move into cash, but that's because my stops have been tight. Unfortunately, uptrends that start on no volume, that have distribution days, that start to get involved with the uptrend as we go along, do not normally end well. I was hoping, I don't really hope much, that this would be different, but clearly it is not. It's this, man, remember, I keep telling you guys, where are my hot chart patterns? Where are the hot chart patterns that do show up that then work immediately? PZE, for instance, is like a full sell today on an end-of-day basis. But like this is another one. It's a speculative name, but that kind of accumulation and bop that we saw here, this before 2008, man, used to always lead to higher prices, just like Graham. And then look at Graham. Graham has been pulling back the whole time on below average volume. So unless you knew 100% to take your gains here off this very extended move on the short term, but nothing was indicative that it was climactic by looking at the volume, you've watched your now gain be reduced from 780 to now 640, and my first sell stop still isn't even till a move below 585 because the stock is still trading above its 20-day moving average. This is just a vicious uptrend that does not reward long-term or intermediate-term trend followers anymore. The hot charts, they shake me out of half of them first off before producing gains like CLR did and Graham both did. Both of these stocks shook me out of half the position before they even started to move higher. And then once they do move higher, they don't consolidate. They just roll back over because we have a very freaking, pardon my language there, extreme, like I care, like you guys care, you hear me cuss all the time, but we have a very extreme market where we make straight V-shaped moves higher and straight V-shaped moves lower. There is absolutely no ebb and flow, back and forth consolidation ever in this market, and it's been like this since 2011, it feels like, 2012. And as long as that's the case, we don't have the hot chart pattern set up. We don't have stocks moving 20-25% in the first 2 to 3 weeks like we should have from all those long positions we took from the February into the April highs. It's shocking the lack of big movers this uptrend around. So either we haven't started the real uptrend yet, or that was just a dead cat bounce and you can expect us to roll over and at least test the February lows. Now the NASDAQ and NASDAQ 100 are both under neutral signals. Basically, the NASDAQ, I waited to throw into a neutral signal until today's breakdown, but the NASDAQ 100, a secondary one that I really am not that worried about because it's such full of the large big cap stocks I have no interest in. That went under a neutral signal on 428, but it's basically confirmed today, and the NASDAQ is now under a neutral signal with its sell-off today. But once again, we can see the same damn pattern showing up again. No low below average volume rally, above average volume selling off. So not only do the distribution days pile up, but when they do show up, they're above average volume, which just continues a trend that we've seen since the quantitative easing started in 2008. And it's absolutely sad and pathetic. But if you're not day trading, if you're not swing trading, you're not making any money. The big gains that come by holding stocks long for a period of time, they just aren't there. Look at OLED. OLED following this move higher should have pulled back. But to pull back the way it has on lower volume, it's just extreme. It's just extreme moves in the market. That's why we have sell signals galore today. PRAH is a full sell signal. PATK is a full sell signal on an end-of-day basis, so is ANIK. VLRS, another new long, has failed. And UA, fail. Speculative names I'm already out of. CVGI is a fail. GRFS is a fail. And then PZE, of course, on an end-of-day basis is fail. Then there's all the 50% sell signals. ABMD is triggering another one. CLR is triggering a 50% sell signal below the 20-day moving average. ALRM, 50% below the 50-day moving average. PACW, 50% below the 20-day moving average. And OLED, 50% confirming the 20-day moving average break, closing below the most recent support. So stocks do not look good here. The trends do not look good. I have very few good-looking patterns. I flagged Nuva, nowhere close to being a long. I flagged the speculative stock semi. This is my best looking pattern today. Look at how far extended it is from the 50-day moving average, much less being extended from the 20-day moving average, so that can't be a new long. GSV is interesting, but really, once again, extended from the 50 and the 200. At least it's touching the 20. That's a miracle. But overall, there's just not really good patterns. CLBS, I like off the 50. If this was a stronger market, this is actionable. As you can see, price is touching the 50. You get up close and you look closer and you look, see price is not only touching the 50, it's touching the 20, 10, and 5 with the 5 stacked above the 10 stacked above the 20. That's a perfect setup. But in this tape, you think I'm taking a stock like this without a huge volume surge and a huge BOP surge back to the green levels that you saw back here? Absolutely not. So caution's being raised. We're still under an operational buy signal on every index, but IYT, it closes below 138.86, for instance. That's going to be a neutral signal. SPY, all it has to do is get below the 50-day moving average, and that's neutral signal. Same with NYSE, and same with the Dow Jones Industrial Average. The Russell 2000, below the 200-day moving average again, but still the 50-day moving average is my line in the sand to go neutral on that signal. Bottom line, we're basically neutral already sentiment-wise. Like I said, we've already have moved ourselves back up to 50% cash. That's a very rapid move from 100 to 50 over the span of 4 to 5, 6, 7 sessions, whenever that top was just 1, 2, 3, 4, 5, so over the past 5 sessions, really. So quite an impressive feat here. Like I said, we need to see the market bounce now, or else I believe the sell-off will just continue to get worse and worse and worse. I don't have a whole lot of hope remaining because my nice charts are basically all drying up. The moderate gains are turning into small gains. The small gains are turning to break even to tiny losses. So once again, it's either tiny losses or small gains, nothing else. Gotta act accordingly. So be careful out there. Caution is advised. I'm not looking for any new long positions until the market starts to find a floor. Until it does that, just raising my stops, raising cash, and nothing else.